Well, folks, get ready to have your flapjacks flip. This stock market is about to be absolutely insane. I'm about to take you through what's about to happen here in the stock market and how crazy this is going to be. It's going to absolutely shake up your portfolios in a pretty significant way. Some portfolios up in a huge way, some portfolios down in a huge way. And I want to kind of take you through my opinions on what's going to transpire here, some opportunities I see in the market, some scary things I see in the market, plus a whole lot more. I appreciate you all joining me as always. Let's just jump straight into this. Thank you for being subscribed, everybody. Appreciate y'all as always. And if you're looking to apply to join my private group, check out the pinned comment down there. You can fill out an application. We can see if you're a good fit. So last week, obviously, Tesla, Netflix stock got hit really hard, right? They're the two big, kind of like, let's call it non-banks, the two big non-banks to report earnings so far this earnings season, right? That people care about, because you've had JP Morgan and Wells Fargo and all the big banks report, but outside of those big banks, you haven't had any huge name companies report. We had two last week. We had Tesla and we had Netflix, two of the most famous stocks in the entire stock market, right? And both tanked, obviously, right? Double-digit percentages down. Netflix went down 10 to 11% the last couple trading days, and Tesla obviously went down over 12% in the last couple trading days there, right? Now, when you see something like that, it's very scary, extremely scary. When you start out earnings season and two of the most famous stocks in the stock market just kind of tank like that, double-digit percentages in a matter of a couple days, a lot of people are like, we're screwed. We're screwed. This is it for this earnings season. We are absolutely done for, right? If you have stocks like Tesla and Netflix, it's a very ominous sign, a lot of people assume, seeing that, okay? Now, what I can tell you, as somebody that's been in this market for 15 flapjacking years, okay, I can tell you, many times what happens in the stock market is you will have some famous stocks report at first, they go down, or they go up, and then for the rest of earnings season, the opposite of whatever ever happened at the beginning starts to happen. So a lot of people assume, okay, Tesla, Netflix went down, all the other stocks are screwed. Microsoft screwed, Meta screwed, Amazon, Apple, everybody's done for, okay? Doesn't work like that. Same thing if these stocks, skyrocketed this week, it doesn't mean all the other stocks. What happens in the stock market is what I like to call a pump fake many times. And it gets you thinking one way, and then it does the complete opposite, right? So everybody's thinking, oh crap, man, if Tesla and Netflix tank like that, we're screwed this earnings season, right? We might be, or it might just be a pump fake, because I can tell you the amount of times I've seen a pump fake the past 15 years in the stock market is ridiculous, where you see two stocks skyrocketing that are famous stocks right at the beginning of earnings season. You're like, oh yes, we're looking good this earnings season, man. We're going to be tearing up money. And then next thing you know, everything just drops and drops and drops. And you're like, well, why did I get my hopes up again? This is what happens in the stock market, okay? So now, Monday after the bell, Whirlpool's reporting earnings. Now, this is an interesting stock. It's a stock that has done pretty much nothing over the past 5 years. You do get to collect a nice dividend with this stock. It pays about a 4.7% dividend yield. And I'm really interested to hear Whirlpool numbers. I kind of hope this stock tanks. I actually do want to buy this stock in my dividend-only account and build a nice position in there. But it's really going to be intriguing because we have the most confusing real estate market we've probably ever had in the United States of America, or certainly in modern times. It is extremely confusing because you have existing home sales that are awful right now. I mean, absolutely awful. We're at numbers right now that we were around like Rona, like March of 2020, April of 2020, when everybody was in lockdowns and no one cared to buy a house or anything like that, right? We're in those sorts of numbers right now, which is shocking. Absolutely shocking. So existing home sales are awful, right? Which is something that should certainly hurt somebody like Whirlpool's business. But on the flip side, you got new home sales that are amazing. I mean, absolutely amazing. These are new home sales. I mean, look at the numbers. I mean, we're way stronger than we were in 2014, 2016, even stronger than we were in 2018, right? And so this is a very confusing housing market. I think part of it is just people being locked in at super low interest rates and just not wanting to sell their homes right now, right? And so at some point, something's going to happen in this housing market. Either the economy is going to get hit really hard and then people are going to be forced to sell their homes and things like that, or we're going to have a dynamic where interest rates eventually come down and that helps the housing market and existing home sales start going back up, right? Especially if mortgage rates start dropping at some point later this year or next year. or we're going to have a dynamic where interest rates are going to get even worse and eventually the housing market is going to crash because it will crash the economy, okay? So we have a few different scenarios, but it's an interesting time now. But somebody like Whirlpool, they can benefit from obviously new home sales because guess what? You buy a new home, you still need to get a bunch of appliances and things like that, right? But existing home sales being so bad right now is really hurt Whirlpool in a significant way because Whirlpool gets a certain amount of business from people that just, their washer, their dryer, their oven, whatever breaks, so they need to go get a new one. But they get a lot of business from people buying a new house, moving into a new house, whether it's existing or brand new, and going ahead and buying new appliances. And so that business is just in a shaky spot right now. So I'm really interested to hear their earnings, right? Now, Logitech after the bell is reporting. Logitech's one of the most fascinating 5-year charts you will ever see in your life, right? It's so crazy because this was a stock that fell all the way down to like $30 during the Rona crash, right? And then all of a sudden everybody was like, wait a minute, if everybody's forced to be home, wait, I think maybe like computer sales might be strong and like all the accessories that go along with that. Oh, everybody's forced to work from home, have school at home. Wait, this is going to be great. And the stock went on one of the most insane bull runs you've ever seen, from like $30 to $130, $140 a share in a matter of about a year and a half. Absolutely insane, right? And then it fell right off a cliff right after that because then all of a sudden the world started to open back up and it hurt a company like Logitech in a significant way. And so literally that's one of the most insane 5-year charts you will ever see. Those sorts of gains and then to give it all back essentially. Now recently Logitech's kind of balanced out here, right? And I'm interested to kind of see what happens with their earnings because it'll be a tell on what's going on with Corsair Gaming as well, which is a stock I personally own. I don't own nearly as many shares I once owned in Corsair. There's just some better opportunities I see in the market, so I still like a Corsair. It's just, PayPal's definitely stolen some of that money away in a few other stocks recently, okay? Now, 3M reporting earnings Tuesday before the bell. This is one of the stocks that is interested a lot of people in the market, especially a lot of retail investors over the past 6 months or so, and if not 12 months. The reason being is the stock's fallen off a cliff. It's one of the most, one of those companies that is seen as like a safety company, like recession proof and all these sorts of things. And the stock's fallen about 50% in the past 5 years, right? And so a lot of people are interested, like look at the dividend yield, look at the business model they have and whatnot. But they're in a devastating spot. They did one of the worst acquisitions in the history of business, like literally, okay? And basically they bought out this company that sells like earplugs and whatnot, and especially for like military applications, and we're switching cameras. And unfortunately, from my understanding, those earplugs didn't quite work the way they were supposed to work, and now they're in these insane lawsuits nonetheless, and it looks like it's going to be something that, it either takes down the whole company or it's going to take down a huge portion of the company nonetheless. It is awful. And this was a company they paid not a very big price for, but they're going to end up having to pay out in lawsuits likely 10 to 20x, 30x, whatever they likely paid to buy out that company. And it's one of the craziest situations I've ever seen. Now, on top of that, 3M just basically recently settled this Forever Chemical suit as well for $10 billion plus. So, I mean, you look at this and it's a mess. That's why I haven't bought the stock. Because I'm looking at it and I've researched it a lot, especially this year, because I'm like, it's 3M. But I haven't been able to buy it because I'm just like, do I want to get in the middle of all these, all this crap? I don't know about that. I don't know if it's worth it because here's the deal. With all these massive lawsuits they're going to have to pay out for, there's a good probability that they're going to have to sell off a bunch of businesses. So what you think, and this is extremely important for everybody watching this to understand, what you think you're buying if you're buying 3M stock right now might not actually be what you get. If you think they're a company that has XYZ earnings power, guess what? I have news for you. They might not have that earnings power because with how massive these lawsuits are, there's a good probability they're going to have to sell off some of these businesses to raise capital, okay? So you might think I'm getting this business and this business and this business and oh my gosh, these businesses are so great. But there's a decent probability they're going to have to sell off these businesses. And here's the thing. If they do have to sell off a bunch of these businesses, your earnings power goes down obviously over the coming years. But secondly, if other companies realize like 3M's in a really weakened position, then they're going to be able to bid pretty low prices for some of these businesses if 3M has to sell off some of these businesses. Now, we know also if 3M has to take out debt of any kind to, let's call it, fund all these lawsuits and things like that, it's a horrible time to take out debt. We do know that. It's the worst time probably in the past 20 plus years we've had to take out any sort of debt. So 3M is such a mess right now that it's a no touch for me, man. It's a no touch. I understand it's tempting, but there's a lot of things in life that are tempting. It doesn't mean you touch them, okay? Remember that. Next up here, Verizon. Oh my gosh, it's another one of these stocks, AT&T and Verizon. These are two stocks that everybody's looking at right now. This seems like easy money, doesn't it? Like, wait a minute here. Wow. First off, the stock is down about 35% in the past 5 years, 35%, right? AT&T's, if I recall, is even worse. And so Verizon's reporting Tuesday before the bell. It looks like, oh my gosh, dividend yield 7+%. Oh my gosh, it's Verizon. Like, come on. Here's the bad thing with Verizon, okay? Two insanely bad things. And this is why I'm not touching Verizon or AT&T, although the stocks look super cheap right now. One, these companies have insane debt loads. I can tell you, with interest rates being where they're at, this is not a great time to be a company that has insane debt loads. And that's exactly what these companies have, okay? And so now imagine a scenario where, let's say, inflation is stickier than people assume. Let's say the economy holds up better for the next few years. Let's say, for instance, say that's a scenario that plays out. Might not be, but let's just say it is hypothetically. Okay, then Verizon and AT&T, these type of stocks are going to be in a really bad position. They cannot have interest rates be up here because they've taken us such insane amounts of debt over time. And, you know, if they have to refinance any debt, it's going to be at ridiculously high rates. These companies were fine for a long time when interest rates were on the floor. When Fed funds rate was like 0%, you know, all cool. Take out as much debt as you want. But now, with Fed funds rate 5% plus, all of a sudden companies like this are realizing, second reason, they have a lead problem supposedly in a bunch of the wiring. That's one of those things that who knows where that's going, but it's probably not going well, okay? Is that going to be $1 billion as charges that the companies are going to get hit with? Hundreds of millions of dollars? Or tens of billions of dollars? No one knows right now. All we know is it's going to be a problem. They're going to have to deal with it. And they could end up in a lot of problems with states, cities, and potentially the U.S. government in general. That's not going to be good, okay? So nonetheless, folks, Verizon, AT&T or those type of stocks that, man, they look very tempting. But once again, just because it looks tempting doesn't mean you touch it, okay? Next up here, Mr. Softy is going to be reporting Tuesday after the bell. Now, when it comes to Microsoft, what do I think is going to happen with their earnings, okay? And by the way, the stock's done tremendous past 5 years, 224%. So in regards to Microsoft, their earnings are going to be just fine. They're going to be just fine when it comes to their earnings. Now, there's a potential for weakness in the stock price because, let's be honest, I think everybody knows their earnings are going to be just fine. So that's not going to come as a surprise. But it seems like the AI excitement hype is taking a little breather. And that's not going to be good for Microsoft because that's a stock that is capitalized huge on the AI excitement and hype. So, if anything, I could be looking for, slight upside in the stock or slight downside in the stock. I don't think it's necessarily a stock that's going to crash, 20% or something on earnings. I think that would be very surprising. But I also don't think this one has a huge upside ahead for this next, I would say, 6 to 12 months or so. So that's my opinion on Mr. Softy. Now, Google McDougal also reporting Tuesday after the bell. And this stock is being almost kind of a lagger of some of these big techs, right? It's up less than 100% in the past 5 years. And compared to some of these other stocks, that's seen as like a lagger, right? You look at somebody like Mr. Softy, 224% gain. Now, Google's interesting because I always look at the main channel here on YouTube. I've had this main channel since 2016. Dating myself here on YouTube, okay? It's a long time. And I've always kind of seen whenever my ad rates are really strong on this channel, actually, usually Google earnings are looking very, very good. Now, whenever my ad rates are in a weakened place, guess what? Usually Google earnings are in a weaker place, which is very intriguing. So it's almost like I have a little bit of insight into kind of what's going on with little Google McDougal here, okay? Now, the interesting thing is if I just look at kind of this year, we've seen a lot of stability. It seemed like the ad market was the worst at the beginning of the year. Like January, February, things were just in a really bad spot when an ad market, came to the ad market. Then things started to come back a little bit. Then we had some more weakness kind of around April, it seemed like. And then since then, it seems like we've been on a little bit of an uptrend throughout May, June, and into July here at this point in time. So I don't think Google's going to report any sort of shockingly great numbers, but it does look to me like things are going to get better for Google moving forward, in my personal opinion, based upon kind of what I look at, okay? So we'll see how it all shakes out. If I had to guess upside or downside for Google stock, I would guess upside, because I think we're probably through the worst of the ad market for right now, outside of a major recession coming in 24, 25, or something crazy like that. For now, it looks like we're in a much better position, kind of moving forward. I do not think it's like booming days for Google, but I think things are going to get a little bit better here, okay? Now, also Tuesday after the bell is Visa. Visa is one of the most important stocks everybody can look at. I mean, this is such a massive company running transactions constantly that if you really want to know how the world's doing, the worldwide economy is doing, obviously the U.S. economy, you want to know those sorts of things, pay attention to Visa numbers. Now, Visa, I think, is a trick stock, okay? And the reason being is, one, it trades at kind of a richer valuation, but it looks to me, okay, there's a lot of potential problems here coming for Visa, okay? One is, it looks to me like the government wants to get in on the money, okay? Meaning, essentially, it looks like the government's going to start trying to dictate how much like companies like Visa are getting in these microtransactions, right? And some of these companies do kind of have like monopoly type market shares. There could be a huge disruption for somebody like a Visa that gets, so much of their money from every time you swipe your card or do a little chip reader or whatnot, your Visa card. Man, Visa just makes a little bit of money off that, and add that up times millions, tens of millions, hundreds of millions, billions of transactions a day. Oh my gosh, it's like the best, one of the best business models ever in creation. So it looks like the government wants to get in between that. But then you have obviously still potential recession concerns. And you know what I saw interesting in a couple other stocks recently that kind of told me what people want to do in this space? It looks to me like people are looking for a reason to sell some of these stocks. Because I saw Discover, right? And that stock sold off big on some news around, a few different things. I don't want to get into that. But, nonetheless, the stock sold off. It looked like people were looking for a reason to sell out of that. American Express sold off as well. So I'm looking at Visa, and it seems like people are just, if they have anything bad at all to say, people are going to be quick to sell that stock. Now, if they have literally not one thing bad to say, then, maybe it can go up. But it just seems like people are looking for any reason to get out of these stocks. You still have recession concerns out there. You got the government potential situation there, right? And so, I don't know, man. It just seems like those stocks are in a position that people are looking for a reason to sell them. And they don't trade at cheap valuations. None of them trade at cheap valuations. So we'll see what happens there with Visa, but I think it's a really important company to pay attention to what happens with their earnings, okay? Now, PayPal. So PayPal could move based upon Visa numbers a little bit, right? These ones kind of get put in the same category a little bit. They might compete on a business here or there, but overall, PayPal is a pretty different company, like somebody like a Visa. So my hope is actually Visa pulls down after these earnings and, it pulls down PayPal. But it does seem like PayPal gets grouped more into like the fintech space than kind of with like companies like Visa and Amex and Discover and things like that. So it's a potential it could move around a little bit, but we'll see, okay? Now, Union Pacific Wednesday before the bell. Keep an eye on those earnings, okay? Here's the deal. We've been in a goods recession in the United States of America for about a year now, okay? Goods recession meaning like physical products, right? It could be like anything, whether you're talking about shoes or whether you're talking about, dining tables, okay? We've been in a goods recession for about a year now. Now, a company like Union Pacific, guess what they're doing? They're moving around all these sorts of goods, right? They're going to get a certain amount of their business from moving energy-related products around, right? And that's what all the railroad operators, they all have certain segment of their business that is either moving, some sort of energy-related, something around that. So that's a really stable business. But goods. So if you want to know how the goods sector is looking, and if you want to know if we're going to likely get out of that recession, then go ahead and take a look at Union Pacific's numbers, dive into those. The whole report's going to be there. Listen to their outlook, listen to their commentary. They're going to tell you if this goods recession's ending anytime soon or if we're going to continue on here, okay? The trucking companies have been in a really bad spot recently. So there's a thought process that the goods recession is ending and we're going to strengthen in the back half of this year out of the goods recession and things are going to get healthier. We'll see, okay? But pay attention to that one. That's Wednesday before the bell. Now, big dog. Meta is reporting Wednesday after the bell. Okay, obviously it's the most important stock for me personally in the public account. It is the biggest position. It's even bigger than Tesla's in that portfolio, right? $535,000 riding on the stock in the public account, right? Now, what do I think is going to happen with Meta stock? Do I think they're going to beat earnings, miss earnings? What do I think is going to happen with the stock price? Okay, so my opinion is I do believe they're going to beat on EPS. Now, the interesting thing is if they do beat on EPS, which I think they're going to do, how does that move Q3 numbers? Because that's going to be really intriguing because Q3 is just very slight growth over Q2. So if they come in and do what I think they're going to do and come in and beat on Q2 numbers, what are we looking at for Q3, right? That's where things are going to get very intriguing. Now, if they also maybe guide out to a strong Q3, right, or a stronger Q3 than Q2, then that might even shake up what happens in Q4 numbers. So this is where you get into this like pretty exciting situation here, because if they come in and do what I think they're going to do and beat these numbers, then you have to start projecting that they're probably going to do $3 something here and likely $4 something here, right? Which makes the stock look even cheaper than it already is. So that's a potential. Now, revenue-wise, I don't have a strong opinion on revenue. I think they could be somewhere in line. If they were to do anything more than 9% revenue growth, I'd be extremely surprised and extremely pleased. I don't necessarily see that happening, but if they do, great. I also don't see them doing any worse than like 6% revenue growth year over year. If they did something worse than 6%, I'd be really disappointed with that. So 7-8%, that sounds about right, in my personal opinion, for Meta. So in regards to their stock price, I think actually their stock price has room to move up here on these earnings. We'll see what happens. And for me as a long-term investor, it doesn't really matter because it's not like I'm selling Meta stock. Like if Meta stock goes to, I don't know, 330 after earnings, I'm still not selling the stock. It's not even remotely close for a time for me to sell that stock. If the stock goes to 270, it also doesn't matter because I'm not selling at 270 either. If anything, I'll probably be a buyer at 270. So for me personally, I look at this one and I actually kind of hope it goes down rather than up. But I do think there's much more upside risk in the stock. Like if you told me $10,000 in call options, I got to buy, or $10,000 in put options. I'm buying $10,000 in calls. It might be a little more intelligent to buy $10,000 in puts because then I could kind of like, hedge a little bit going in these earnings. But I just feel like there's much more risk to the upside than the downside. We'll see what happens. I'm ready to take advantage if it gets any opportunity, but I just don't see it in this one. Now, Zuck's looking pretty darn confident. I'll say that. Man's out here surfing around on a lake, okay? Man's out here doing MMA. I don't know. This looks like the most confident version of Mr. Zuck I've ever seen. He's openly challenging people to fights. I don't know, man. We'll see what happens with these earnings. Man's looking pretty confident. That's all I'll say about that. Okay. Now, Chipotle. They're reporting on Wednesday after the bell also. Now, this is one of the hottest stocks in the stock market the past 5 years. Find me more stocks that have this sort of, 5-year gain. It's going to be very hard to do. There's some of them out there, and some of them I do own. Elf on a Shelf and Tesla and some of those, right? But I'm telling you, to find this sort of gain on a 5-year basis is tough. 384% in the past 5 flip and flapjacking years? Is this NVIDIA? Is this AMD? Like, what are we talking about here? This is insane, right? And, I mean, Chipotle is just one of those stocks I always look at and I'm just like, it's got to go down. It's got to go down at some point. Like, they sell flipping flapjack and burritos. Are you kidding me? And we're pushing a $60 billion market cap on this company at this sort of PE? I mean, my gosh. But Chipotle, they just come in and they report these numbers and you're just like, how did they do it? How did they do it? So we'll see what happens with Chipotle, but I will be keeping an eye on Chipotle. Now, Mattel. Okay. All right. You told me there's one stock I have to buy call options on for the next 6 months. Let's say they expire in January of 2024. Okay, 6-month out options. If you forced me right now, Mattel. So Mattel is got a pretty intriguing story going on right now. Okay, I don't know if you guys know, but this Barbie movie is absolutely tearing it up at the movie theaters. They just did $155 million. Nonetheless, folks, I think a lot of Barbie dolls are going to be sold the next several years, to be honest. I think retailers are going to be putting in insane orders, and I think Mattel has a potential to hit all-time highs in terms of their stock over the next, I'd say, 6 to 9 months or so. The amount of hype that I think is going to build in Mattel stock is going to be massive. I wouldn't be surprised if on Monday the stock's even up big, huge. We'll see what happens, but I wouldn't be surprised at all. But this is blowing away expectations, this Barbie movie, in terms of the numbers it's putting up. And I'm just telling you, like, it's going to add up to a whole lot of Barbie sales, okay? So we'll see. But all I'm saying is that one looks pretty darn intriguing from at least a short term, even over the next, I'd say 12 to 24 months. It's pretty intriguing. At some point in time, the Barbie hype will calm down a little bit. But for right now, it is full go. And actually, the stock hasn't really responded the way you thought it would respond. I mean, it's had this little run up here this year from like 17 to 21. That's nothing. That's nothing. That's all I'm going to say about that. That's nothing. We'll see. Now, Thursday, you got Mickey D's. Overvalued, overvalued. McDonald's reporting, my favorite overvalued stock. We'll see what happens there. You got Southwest Airlines reporting, which I think is intriguing, especially if you want to know how the domestic airline market is right now, and if they're starting to see any weakness at all, or is things still looking super strong. We know the airline's been strong for at least a year now at this point in time on the domestic side, right? MasterCard's reporting, that gets put in the category of like Amex, of Discover, of Visa, that whole category. So we'll see what happens there. Also keep an eye on Enphase. It's just a real, just a lot of people are always excited about Enphase. They're having a lot more trouble with kind of their business model. Then you go Friday, you got, big oil reporting. You got Exxon and you got Chevron. So I'm actually really interested to see, with obviously energy prices being in a weakened place versus last year, how much does that really hit ExxonMobil? How much does that really hit Chevron? So usually I don't even care about ExxonMobil earnings or Chevron, but I'm going to take a peek at both of them because I'm really intrigued on, what energy prices declined, over this past year. What does that mean for their business models? I'm really intrigued with that. It's been a tremendous year, obviously, for the public count, but I can tell you this week's going to move that account significantly. And, this year we started about $1 million roughly in the public count, and now we're up to 1.76 million. And, at some point in time, you're going to have some big dips in a portfolio, right? That's just what happens. And we had several kind of cool off periods, even this year, right? Where, things kind of dipped in the short term. And even right here from that's about February roughly through about March, you had a pretty slow time in the public count. And then we went through our next major upcycle here, right? And so we'll see kind of what happens here, but I remain obviously optimistic on the long term. And then the Patreon portfolio, I've been really proud of this one. And what's interesting about this portfolio, I think this goes to show you can build a portfolio pretty fast on a small amount of money. I only deposit $150 a week in this portfolio. Now, everybody that's watching this video, you need to be in a financial position where you can deposit a minimum of $150 a week in your portfolio. That should be bare minimum. If you're not there, you got to figure out what's going on with your income expense situation, okay? And you know what? We're going to probably hit, in my opinion, $10,000+ this year between the gains we're going to have on stocks and between ultimately the $150 a week. We're going to be at 10,000 plus by the end of the year, in my opinion. That will be in the first year. So it goes to show you can get the snowball rolling much faster than I think a lot of folks anticipate, right? If you can build a portfolio of $10,000 plus in the first year, and that's off a small amount of money. If you're a baller, you can do $500 a week. If you're a mega baller, you can do $1,000 plus a week in your portfolio, right? And then the numbers get really fun, really fast. And you're like, oh my gosh, six-figure, where we got this six-figure award? You're like, six-figure club, baby, we're coming quick. If you can do $500 to $1,000 a week, whew, that six-figure club's going to come fast. If you can do $2,000 a week, then you're a mega baller. You might be seven-figure club before you know it. But nonetheless, folks, pretty exciting week. I'm looking super forward to it. This is the most fun times in the stock market, in my personal opinion. This week's massive. Next week's massive. These next 10 trading days are everything, and this will be what dictates the stock market really for the next 2 to 3 months, to be quite honest. So appreciate everybody joining me as always. Thanks so much for being here, folks. Thanks for being subscribed to the channel. I appreciate y'all. If you're looking to apply to join my private group and learn everything I got up here, download it into your brain, and check out the pinned comment down there. You fill an application. We can see if you're a good fit for there. Much love. Appreciate y'all. I'll keep you up to date, obviously, this week, and have a great day.